The likelihood or the chance of an AMC squeeze just became highly elevated. Today I want to talk about why tomorrow's CPI data release is a massive deal for the AMC squeeze. I want to talk about what impact this data is going to have on the stock market and the crypto market and how it's going to cause the squeeze. So stay tuned and let's make some money. And now I want to dive straight in with the key information. So, Unusual Whales just tweeted saying breaking news. White House spokeswoman Jean-Pierre says I expect the new CPI data to be highly elevated. Her comments have just escalated inflation woes ahead of Wednesday's US CPI release for June. So far that CPI or inflation is expected to come in at 8.8%, larger than last month's 8.6%, but considering it could be highly elevated, it could even tip 9%. You may remember I spoke about this specific 9% figure all the way back in December and all the way back in January. I personally believe this key 9% figure will trigger the final Hail Mary crash and trigger the AMC squeeze. On the same line, the Atlanta Fed President Raphael Bostic said the recent inflation data has not been as encouraging as I would have liked. Currently, traders see an 88% chance of at least a 75 basis point rate hike in July, and it's likely the Federal Reserve Board will view still cresting CPI data as a reason to follow through on tough interest rate policy to quell inflation. And of course, a higher federal funds rate will further increase mortgage interest rates at a time when prices are still seemingly increasing, although tons and tons of mortgage deals have actually been cancelled at the last second, but that's a topic for another video. While mortgage interest rates continue to increase, this further leads to higher monthly payments and increase the chance of a housing market crash as well. But so what exactly has been going on here and what exactly does that mean? So far inflation has been on an absolute rampage, increasing throughout the entire of this year from 7.5% so far all the way to 8.6%. However, the June CPI data is expected to come in at least 8.8% and maybe even hit this dreaded 9% figure. That means that even though the Federal Reserve raised interest rates by 75 basis points last month, that had absolutely zero impact on inflation, and inflation continues to rise. That means it's likely the Fed needs to actually increase these rates even faster than 75 basis points per month to even start to put a dent in the inflation figures. Not only has the Fed not even put a dent in inflation, in fact they've put the opposite of a dent in inflation as inflation continues to rise. As inflation continues on even higher and as interest rates are also raised higher and higher, it basically increases the likelihood of a global recession and a stock market crash. And obviously as the stock market continues crashing and trillions of dollars is wiped out from the US stock market, this effectively brings these hedge funds closer and closer to that liquidation point. The majority of hedge funds are still largely long on the market. Even these hedge funds that are shorting AMC, they're only shorting AMC with a small portion of their overall portfolio, and the remainder of their portfolio is still long on the market, long on the S&P 500, long on Microsoft, Apple, Amazon, Netflix, and many other stocks, just solely short on AMC, GameStop, and the small meme stock basket. Therefore, as AMC continues to rise like it has done over the last few days, and as the stock market continues to fall like it's done over the last few days, it pushes these hedge funds closer and closer to that margin call position and that forced liquidation position. We can see that over the last few days or over the last week, the reverse repo facility has slightly cooled off some over the last week. Obviously there hasn't been significant panic in the market and that's why we haven't seen new highs on the RRP facility. However, when the CPI data is released and all hell starts to break loose, I expect new records to be set in the overnight repo facility. The overnight repo facility is used to try and avoid a squeeze, whether it be a market squeeze or specifically an AMC and GameStop squeeze, and so far these funds have been taking full advantage of the reverse repo facility. But as the usage continues to get higher and higher, it pushes these hedge funds towards that breaking point, and it will eventually happen when the market crashes, when we hit this 9% inflation rate. And guys, if you haven't already, be sure to sign up to Moomoo right now using the link in the description below to get 10 free shares worth up to $2,500 each. So that's up to a total of $25,000 in free shares. Moomoo is very easy to use, it's incredibly customizable, they've got tons of technical indicators and advanced charting tools. From Moomoo's latest customer agreement, they also state they do not benefit from your order flow, and they do not sell your order flow to market makers like Citadel or to clearing houses like Apex Clearing. In fact, Moomoo clear their trades on their own through their clearing broker Futu Incorporated, which does also not sell your order flow. And something that could potentially increase the rate of this stock market crash and the crypto market crash is this tweet from Ross Gerber. He said, "I can't tell you how much this man scares me for the future of crypto. He seems to be running something very questionable. I learned this lesson taking apart AIG when it went down, if the glove don't fit." Sam Bankman-Fried in FTX seems to have come out of the shadows completely to practically save the entire crypto industry, extending loans, bailouts, and rash investments to all of these failing firms. But as I've said in a number of videos over the last few weeks, I do think this is a mistake by Sam Bankman-Fried at FTX, bailing out these failing companies because it's very, very risky business and it could blow up in his face. One such example of said blow up is his investment of $500 million in investment and in loans into Voyager Digital. Unusual Wells tweeted saying Voyager Digital has a plan to reimburse users, but the bankrupt crypto lender has said that users may not get 100% of what's owed. aka even the customers are only going to receive pennies on the dollar, and therefore their investors, aka FTX, is likely to receive fractions of pennies on the dollar, if not zero. It's likely many of the Voyager Digital users will also receive zero and aka never see a penny of what they had on the platform. Therefore, in the space of only a few days or a few weeks, Sam Bankman-Fried has already lost over $500 million, and everything does seem to be coming crashing down around him. Mac 10 also tweeted this chart saying 2008 revealed Madoff's mini Ponzi scheme. He said now, every day more fraud is revealed in crypto, orders of magnitude bigger than even Madoff. He said everyone is withdrawing liquidity from crypto lenders, but yet 3AC was supposed to be the adult in the room and has yet failed. This chart on Google Trends shows the frequency of the search term crypto fraud. As we can see, while crypto has been crashing, the amount of fraud in the crypto industry has been skyrocketing. We're seeing supposedly trustworthy funds, firms and exchanges all coming crashing down while the crypto market is failing. While these fraudulent funds and exchanges are failing, they're causing a massive dent in the crypto market, which is impacting on the stock market as well because of how closely linked crypto and stocks now are. Many major funds, institutions and major banks have been investing into crypto over the last couple of years, and that's in part what caused the crypto market to explode so heavily. But now all of these institutions, major banks and major funds are losing billions and billions of dollars, if not trillions of dollars, from the crypto market. Because of the significant losses they're taking, they're having to rebalance their portfolios by selling off not only their crypto, but also selling off their stocks to balance everything out. And obviously selling off these stocks in a fire sale fashion is just helping to crash the stock market even further, again bringing us closer to that AMC squeeze. But even Bloomberg and the European Central Bank is agreeing and is saying stablecoins must urgently be brought under increased regulatory oversight before they can become a risk to financial stability. Again, I don't just think it's stablecoins, I think it's crypto as a whole that right now is already posing a risk to financial stability. As the crypto market continues to collapse, as these stablecoins are unveiled as nothing more than Ponzi schemes, and as these giant exchanges and funds again are unveiled to be Ponzi schemes, it's crashing the crypto market further and further, crashing the stock market. If you've so far kept up with the amount of times that I've said crashing in this video, you can tell that it's already a risk to financial stability. Finally, Khaki Trader asked Charles Payne his thoughts on why AMC hasn't hit $100 per share yet. Charles Payne did reply explaining the obvious, saying there's currently more sellers than buyers, but specifically used the word more synthetic sellers than buyers. Right now, this is the case because these market makers are currently creating more synthetic shares than we have so far bought. That is why the price of AMC has continued to fall down from $70 per share instead of increasing over $100, over $300, over $1,000 and beyond. But obviously when the market does crash and these hedge funds are forcibly liquidated, they'll be forced to buy back all of the shares that they were shorting, including the synthetic shares, and at that point you'll have more buyers and more synthetic buyers then you'll have synthetic sellers. When there's more hedge funds buying than there is market makers shorting synthetically, that is the point when we have the squeeze. And obviously, to cause more hedge funds to buy than the market makers can short synthetically, that's why we need a market crash to force them to be liquidated, or to force them into liquidation, to force them to close out of their positions and buy back all of these shares. But guys, be sure to let me know what you think down in the comments below. And as always guys, be sure to ding that notification bell, because that way you'll be alerted when I upload a new video. Cheers.